Westpac expects a 15% property surge. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee because this is going to be an interesting one from Westpac, guys. All the people that have been worrying about property going down or property falling, you know, the CBA or the RBA with their 40% fall prediction, they're all wrong now because apparently Westpac is saying that we're set. House prices are set for a 50% property surge. And let's just we'll bring up the house values here. You can see Sydney, we're what, 866, Melbourne 678, Brisbane a good 500, Adelaide 441, Perth about 442, Hobart 486. I'm still surprised Hobart is more than Adelaide, but that's just the world we're living in now. Darwin at 384, and Canberra over 640. So, I mean, Darwin's probably the only one under 400. You know, I'd rather have a mortgage under 300, but under 400 that, you know, you could manage. You could manage. Because, well, for those of you that may have been asleep for a while, we have had this little tiny obsession with property here in Australia. This little tiny obsession with property. And it's boomed over the last 20 years, really. So let's have a look here because, well, we're set for a 15% surge, everyone. Now, the question is this a 15% surge where the purchasing power of our currency is going to be, you know, inflated away, or is this a 15% surge in actual purchasing power? So, national home prices will fall 5%, peak to trough, before rebounding from mid next year, according to Westpac economists. House prices are set to bottom out by June after a 2.3% fall before bouncing 15%, according to Westpac's economics team, who believe low mortgage rates and a less severe recession than feared will stabilize the market before a solid recovery. How can they anticipate a less severe recession? We actually haven't experienced the recession yet. Or are they anticipating, you know, just the can of government stimulus to keep being kicked down the road? After previously expecting a 10% slump in national prices between April this year and June 2021, Chief Economist Bill Evans yesterday lowered the expected fall to 5% as several capital cities proved more resilient, particularly Perth and Adelaide, but also the biggest market of Sydney, where prices are likely to only adjust 5%, half the amount previously forecast. Melbourne, however, is expected to decline 12% by June, or a further 8%, as lingering disruptions from the second lockdown and the city's heavy exposure to tourism, foreign students and migration inflows weigh on the recovery. The new forecasts mean national prices are only expected to fall a further 2.3% by June, having already declined 2.7% since the peak in April. From June 2021, Mr. Evans, a senior economist, Matthew Hassan, predicted a 15% national price surge until mid-2021, or a 7.5% or 7.5% year, led by massive gains of 20% in Brisbane and 18% in Perth. Now, yesterday we looked at another article, which is just discussing, I'm trying to find it here on my list, the tremendous fall in housing demand over the next couple of years. Over 200, you know, one scenario predicts over 200,000 less dwellings needed because of the decline in international students and migration. That's going to have an impact on dwellings. So are we still going to see a 20% rise in Brisbane and Perth? I mean, I live in Brisbane. I mean, see, this is the thing. Once you get in the housing market, honestly, once you get in the housing market and your property goes up and you get all this equity, you know, it's ludicrous. It is just, it is not, I can see why people get so obsessed with property, because compared to actually working, compared to actually starting a business, compared to employing people, compared to innovating, compared to, you know, where I've imported equipment from overseas and spent tens of thousands of dollars investing in new technology and then advertising it to try and get work for that tech. Just buying a house there and making the equivalent of, you know, what, a year or a big chunk of your, well, no, more profit in 1 year from just equity growth than running a business, you can see why we're so obsessed with this. Why Australians are so obsessed with it. I can appreciate it. So, I mean, hell, I'd love a 20% gain. I don't believe the bank. Maybe I'm just too stoic, guys, and always looking at the pessimistic side. 20% growth with what? What's going to drive it? Could it be the people getting out of the southern states coming up to Queensland? The recovery will be supported by sustained low rates, which are likely to be even lower than current levels. Ongoing support from regulators, substantially improved affordability, so that means falling prices, sustained fiscal support from both federal and state governments, and a strengthening economic recovery, particularly once a vaccine becomes available, which we expect in 2021, Mr. Evans said. So you can see here, this is their dwelling forecast. Brisbane. So we're here in Brisbane, guys. We're meant to be the peak, the highest one, and then Perth. We bring up, well, we can see here, this is all the houses. We can see, but I mean, that's the thing. Compared to Sydney and Melbourne, Brisbane, we're at $500,000. Perth is at 440. So the median price is still, I'd say, high, but definitely much more reasonable compared to some of the other cities. Perth and, oh no, Sydney and Melbourne just crazy with regards to income, particularly if you can work remotely. So if you're in Melbourne, you've had enough of it, you just want to get out now, and you come to nice sunny Queensland, you get yourself a nice house, you can work remotely. Why not? Where would most people go first? Well, it'd be Brisbane. Although I hear a lot of land is going in Bundy. So, however, it's unlikely to be a straightforward ride. The economists see a 4-stage housing cycle playing out. In the first stage, which has now largely passed, prices declined in response to the COVID shock to the economy. Okay, has that largely passed? We still have so much intervention in the economy. The upcoming December and March quarters mark phase 2, a period in which Mr. Evans tips relatively stable prices, possibly even some modest increases. Okay, in December we're losing the job seeker boost. JobKeeper is going to be phased out. You've got trading while insolvent disappearing in December, but then again, they may just extend it again. Remember, it was meant to disappear at the end of this month. They may just extend it. Maybe you should just say they will kick the can down the road. You've got bank mortgage holidays. That's the biggest thing, is where people, investors, are feeling the pressure. Are you going to start seeing the taps on the shoulders and the forced sales? He said, while the Reserve Bank was unlikely to cut official cash rate further, fixed rates, which have recently proven popular, may well go lower to improve affordability. Okay, so that's how he's arguing for it. Also supporting the near-term outlook, Westpac recently upgraded its GDP growth forecast for the second half of 2020 to 4% from 2.8% and lowered its year-end unemployment forecast to 7.8%. Now, could this be because our unemployment rate has, gone down to 6.8%, guys? But remember, when we were looking at that, most of the new jobs were for, sole business people working by themselves. The amount of hours worked only went up 0.1%. Hopefully, maybe this could be the kick that Australia needs, the slap in the face Australia needs to become, a drive and innovation, and a whole wealth of small independent business people start to, rise up, and then all of a sudden we start to see a shift in the Overton window where people are going, no, I don't want to give all this money to the government. For the first time, you've got these people actually earning and having to pay themselves. And then we'll start to see a more sensible political policy emerge and the dialogue shift. I mean, could happen. Be nice. So phase 3 occurs through 21 and features some limited resumption of downward pressure on prices amid an increase in urgent and distressed sales as borrowers struggle or are unable to resume mortgage payments. Okay, so he's seeing that then in 21, which, I could see happen. People are just doing whatever they can to hold on to their property. They're wanting to wait it out, and then that might be the time when they just can't kick the can any further. But he said prices would then lift again in the 4th phase, once this selling pressure has worked through the system. Forecast change comes amid improving optimism among economists about the housing market following better than expected performance and data. Housing finance approvals last week jumped by a far stronger than expected 8.9% in July. Mr. Evans said he had been surprised at the strength of the recovery in new lending, and the 15% price rise call may also prove too cautious. It may prove too cautious. Readers might see that estimate as optimistic, but there are some risks to the upside, he said, including the 5% fall we expect out to mid-2021. This would see a cumulative increase, I'm going to keep that in, increase in price of 10% from the pre-COVID highs over the next 3-year period, where interest rates and credit supply are likely to be at maximum levels of stimulus. Oh, wow. Those upside risks are based on the psychology of markets. If participants are convinced about our views on the likely favorable conditions in the fourth stage of the cycle, they may choose to boost demand earlier than we currently expect, providing an even more robust defense against the headwinds we envisage in stage 2 and 3. So, there we have it, guys. What do you think, everyone? What do you think about Westpac's predictions of a 15% house increase? So 5% fall, 15% up. So essentially 10% increase. You know, and Brisbane and Perth leading the way. We'll have to see, everyone. We'll have to see. Are they being too optimistic? Or do you think this is what will happen? Will we actually see the dramatic falls, or will they just happen to kick the can down the road even more? I mean, what happens when people buy these houses and can't get their jobs? You know, I mean, that unemployment, sure, it's been better than expected. But hours worked haven't. We'll have to see, guys. We'll have to see. As always, thanks for watching. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I created, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or KuCoin. You can buy merch from Heiser Says. Use our affiliate links from Amazon, eBay, Independent Reserve, or KuCoin, or support us via PayPal. Take care, guys. Have a great day. And wait for those 20% increases in Brisbane. See you next time.